Alright guys, it's Brent here with Silver Creek Realty Group. We are the largest brokerage in the state of Idaho, and being the largest brokerage in the state of Idaho, that does provide us with a larger inventory and more resources than pretty much any other brokerage in the state. So today I have with me Burks. He's with Finance of America, and we just want to kind of go over what's going on in the market right now, more specifically some of the interest rates. We know they've been talking about raising them a lot recently, and they finally did. So we're just going to talk to Burks about that and kind of see what that means for buyers and kind of what the future holds.
Well, thank you very much, Brent, for having me. I certainly look forward to doing what I can to help and assist your viewers on your channel, to help them better understand the market, to see if now might be the right time for them to buy a home. To start off, we always kind of like to look at the dynamics of what the previous year was. So in 2016, how the market went. Right at the end of 2016, the Fed did a rate hike of 0.25%. And so that kind of shot some waves throughout the market here. Sure. And so to kind of end the year. Now in 2017 dynamics, we look at one of the huge things is going to be the Trump administration. And the reason why is because it's going to affect how the market's going to move this year and what interest rate's going to do. All right. So one of the big things with the new Trump administration, we're looking at a few things that he wants to do. So such as repealing Obamacare. But what's really going to change the interest rates more than anything else is how it's going to affect rates anyway. It's going to be with corporate tax reforms.
Sure.
So that's going to be a huge dynamic this year. And last night, he did an interview with Sean Hannity, and he mentioned right away that he wanted to do a 15% tax rate across the board, corporate tax rate. So that's very optimistic for businesses.
Sure.
And so because that's very optimistic for businesses, eventually what happens, it helps to increase the inflation point across everything. So that is one thing. Another thing the Trump administration wants to do is cut back on regulations. And also in last night's interview, he says, well, we want to cut back 75% of regulations. So that's a huge cut.
Absolutely.
Which would, at the same time, increase optimism across the board. So what does that mean for interest rates, right? So right now, interest rates are hovering, well, this is January 2017, and interest rates are hovering right in the low 4%. 4% range for a 30-year conventional conforming fixed interest rate. It was roughly about 3.5% in the summer of last year. So as you can see, 3.5 to low 4s is a huge jump right away. So home inventory. So we talk about supply and demand. All of these things help contribute towards interest rates as well. So right now with home inventory on a national spectrum, we're looking at is roughly about a little more than 4 months of inventory. Here in Idaho, in Ada County, we're looking at 2%. About 2% of home. I'm sorry, 2 months.
2 months. Yeah.
2 months.
Right about 2 months. Yeah.
2 months of home inventory, and in Canyon County, it's less than that.
Yeah.
So because of that, we're seeing raises in prices, home prices. The average selling prices are going higher. We've seen the FHA loan limits have also increased as a result. So loan limits have increased for both FHA and conventional conforming loan limits. They both increased. So what we found too is how the rates are going to go this year. Right now we're right in the mid-4s. So how are the rates going to go this year? Well, we have to look at the rates. We have to see how the Fed is, the Federal Reserve. And right now there are 19 members of the Fed. And out of the 19, there's 10 voting members. And the reason why that's very important is because those voting members are going to dictate if they're going to do another rate hike this year, and if they do, how many rate hikes.
Right.
So last year, 2016, there were 5 doves and as far as voting members, 3 hawks, and 2 centrists. So, and how it works is doves favor lower interest rates.
Sure.
They believe that would help stimulate the economy and whatnot. Hawks, on the other hand, are a little bit more aggressive, and their focus is on higher interest rates to kind of do the same thing to increase jobs and whatnot.
Sure. Yeah.
So then you had the centrists, just those middle of the line folks. But because last year we had a very dovish Fed with 5 members, so the majority was doves, meaning that there was only one Fed rate hike.
Sure.
If the majority were hawks, we're looking at multiple rate hikes.
Sure.
So the makeup of the Fed this year is a little different. We've taken 2 of the hawks from the voting members, and they've become centrist. So there's still 5 doves, which means that it's still 2017 is a dovish Fed, which means that we're going to be lucky to get another 1 rate hike up this year. Last year, the rate hike happened right at the end of the year, right on December 15th. So I'd be very lucky to get 1 more rate hike, maybe 2 if the economy is doing extremely well. So what does this mean for homeowners with the raising interest rates that are happening? And I know, Brent, a lot of folks have been on the fence about buying a home. They're like, well, interest rates they're going up, home prices are going up. Well, we want to sit around and wait until it goes down again. I want to let your viewers, your audience, your clients know that we do not anticipate rates going down again, not in the below 4s, unless, again, something drastically happens to the economy where it tanks. So how interest rates work generally is that in the better economy, rates go up. Just kind of how it is.
Sure.
But not to freak out folks here, with rates being in the low 4s right now, we anticipate rates before the end of the year is over, we're going to creep up to a little over 4.5. So maybe right around 4 5/8 is what we're going to possibly see the rates hiking up to before the year is over. But even if so, I don't know if some of your viewers have been around in the mid-80s where interest rates were at 18%, right?
Yeah,
so
we're not there yet.
And we're not there yet, yeah. So
Yeah.
we're a heck of a lot better than what we were then. When I first got into the mortgage business in the early 2000s, rates were right around 7%. And of course, it's gone down quite a bit since then, and right now we're on a track to kind of go back up again. So right now the Dow, as you know, had just crossed its 20,000 mark this week.
Yeah, right.
So because of that, we've seen rates somewhat going in a higher direction because it's a sign of a good economy. But every time the Dow had hiked past a landmark, whether it was 1,000, 10,000, or now 20,000, we've also seen a big pullback, which means rates have also dropped a little.
Absolutely.
Not enough to really make a huge impact in the purchase market, but enough to warrant possible refinances and that sort of thing. Because folks like myself in our line of work with mortgage lending, a lot of our refinance business have dried up because no longer are we having folks calling us, hey, I've got a 4.5% interest rate, I'd like to get a 3.5 now. It's not happening.
Sure.
Right. So right now, all of our focus is really on a purchase market to assist all of our clients that are interested in buying homes, realtors to helping you sell more homes with the loan products and such that we have available.
So let me ask you this: what would you say to the buyer that's maybe been riding the fence? Now we're kind of saying, okay, the rates are going up. Is it too late, do you think, or do you think they should still get in?
That's a great question, Brent. What I like to do always with buyers, and we're looking at a huge surge in first-time home buyers. Now, the millennials, you might be a millennial yourself, but the millennials have been a little longer to buy homes, to get into the housing market.
Sure.
They take a little longer to get married,
Sure.
take a little longer to have kids, and which leads to a little longer to actually buy a home.
Absolutely.
So folks my generation, however, are becoming a huge first-time home buyer category and whatnot. But we haven't given up on the millennials because they're still buying homes, and that we're going to see that probably in the next couple of years where the millennials are really going to take control and start getting to the first-time home buyer market.
And I did see recently that the millennials are actually now the majority of the workforce.
You're absolutely right.
Which is going to translate into the majority of the buyers here.
You're absolutely right.
Real short.
It's currently not at the moment, but we do anticipate seeing it happen very, very soon. And so someone who's on the fence right now about buying, what I always like to do is show a lot of folks a comparison with, well, if you haven't bought, there's a good chance of renting. If they're not renting, they're staying with family or friends, whatnot.
Sure.
So, but most folks will be renting. And so if you're renting, I always like to give renters a comparison. Here's what you're paying for rent, and here's how easy it is for you to get a loan, or what your mortgage payment would be. Because a lot of folks are very surprised that a mortgage payment now could very well be less than what they're paying for rent.
Absolutely.
And not only that, but right here in Idaho, there is a program with the Idaho Housing Finance Association where a home buyer, a first-time home buyer, could get two different loans. One loan would be an FHA loan, it would be 96.5% of the loan amount. They could get a second loan for 2.5%, which means they'd only need to come up with 1% of the entire purchase price to actually buy the home.
Right.
So the days of having to come up with 20% as a down payment are long gone, because we understand home prices have gone up. Not a whole lot of folks have, $20,000 or so, $30,000 sitting around in the bank account somewhere.
Absolutely.
So having that 1%, and so some of the loan programs right now, Brent, have actually become a bit more flexible to assist these home buyers with getting homes.
Sure.
So right now, a lot of home buyers, especially first-time home buyers, some folks could, maybe their credit may not be as great as what they'd like it to be. But what we do here at Finance of America is actually go through the process, do a free credit analysis to help them to buy the home. We take a look at your credit, what's it going to take to get the score high enough to actually qualify and purchase a home. So I would highly encourage any of you viewers who might be on a fence about, hey, let me see what it's like to actually buy a home, to contact us here at Finance of America or their local lender that they trust to figure out what is a rent versus purchase comparison and just how easy it is, because a lot of lenders, to include us here at Finance of America, we don't charge for this service. We'll go ahead and take the application,
Absolutely.
we do the credit analysis, doesn't cost them anything.
It's free. Can't beat that, right?
Can't beat that at all. All we do is we verify the past 2 years of history, where you've been living, where you've been working, for the most part. And we'll be able to lay out for that client what the options are, exactly what's going to be needed to come out of pocket. And right now, in terms of the housing market, we're starting to see a lot of sellers, home sellers, actually contribute towards closing costs to help out that buyer with actually buying that home.
Absolutely.
So it heavily minimizes all that out-of-pocket expense. And the great thing with Silver Creek Realty, I know, is that the largest real estate brokerage here in Idaho, and I know, no question about it, they do provide a lot more services or inventory to clients just because it's the largest group here in Idaho.
Absolutely, yeah.
So I think you folks have a lot to offer.
And I'm glad you brought up the closing costs, because that is something that can be negotiated. A lot of people think, that it can't be, or it's not. And that's something, if that's an issue, kind of money up front, down payment, that kind of stuff, that's an issue for anybody, talking about it, because that is something you can ask the sellers to pay for you, and sometimes you can just, up the sell price, and there's all kinds of different ways to kind of negotiate and work that. So yeah, don't let down payment be an issue for you. Because as Burks was saying, now, you can get people getting into houses with $500,000, down, next to nothing. So don't let that hold you back by any means.
Yeah. So again, if any of your viewers would like a free complimentary assessment or pre-approval, go through the pre-approval process, we're more than happy to assist them. I'm sure, I'm sure they're well aware that you're going to be able to utilize all the resources you have at your fingertips with Silver Creek Realty to help them find the home of their dreams.
Absolutely, yeah. So, and I guess kind of the big question, one that I get asked a lot, and honestly, it's a question I hate. You know, what are the interest rates? And I always tell people, well, what's your credit score? You know, is your credit 500 or is it 800? Because that's going to be a big difference, you know, in your rate. So, it's obviously different for every person, but as we were kind of talking before previously, kind of the average is right now right about low fours. You're saying.
Yes, Brent. So in terms of interest rates, if someone wanted a benchmark for what should I plug into a online mortgage calculator, I mean, I'd plug in 4.25. I mean,
Sure.
But then those kinds of rates are conforming rates, which means that the credit score has to be good, right?
Absolutely.
And they have to have a certain amount of money down, at least 5%, and that sort of thing for those loan programs. The one thing I always want to reference to folks is the reason why I mentioned 20% earlier as a down payment is because in order to not have to pay what we call private mortgage insurance, which could be a couple $100 a month extra, you'd have to put 20% down.
Sure.
And if you were going to finance 85% of the home, well, that's not 20% down. I mean, that's 15% down. So you'd still end up having to pay mortgage insurance. Okay. So a lot of folks right now, especially if you're buying a home maybe for the first time, they don't have that 20%. They might have 5% that qualifies for that, but
Sure.
then I always want to reference right back to what the FHA loans are. So the reason why I say that is because right now through the Idaho Housing Finance Association, their rates are published right online, is at 3.75%. The APR is 3.85%, but it's 3.75 for 30 years.
Sure.
And so that's a fantastic interest rate. And with what mortgage insurance, because you're going to have to pay mortgage insurance with an FHA loan, which is the cost of getting it.
Yeah.
But what I reference and always suggest to my clients is let's take a look at a couple of options. One, a 30-year interest rate, and also what an adjustable rate mortgage is. The reason why I say that is because adjustable rates are lower than 30-year fixed rates. We've hardly seen a lot of folks that are going to keep their mortgages for 7 years, more than 7 years. A lot of folks tend to buy or sell or refinance or do something within 7 years, 7 or 10 years. They're going to do something with that mortgage.
Right.
Not so many folks these days get a loan and keep it for all 30 years.
Sure.
So why do you want to pay a higher interest rate for those 30 years, right? So I understand that the one scary thought about folks not wanting to do an adjustable rate is because they've heard of rates going up, skyrocketing. And that did happen in the 2000s when we had pay option arm type of loans, where interest rates could start off at 1%, and next thing you know, you got a 6.5% rate, and your payment just went up, 2 or 3 times.
Sure.
That's what led to a lot of foreclosures and that sort of thing. So that's what's in the brain of a lot of folks. But we're not comparing it. There's no more pay option arm loans to compare it with. So we're not going to see that same huge jump and bump in rates as what we've seen in the past.
Mm-hmm.
So right now, I'd also highly encourage anyone that is taking a look at purchasing a home to do an adjustable rate mortgage. We're starting to see right now adjustable rate mortgages slowly but surely go up as well for applications. So I would highly suggest anyone to consider that as an option.
Absolutely.
And we'll put it side by side and see what makes sense and fit the best needs for your clients.
Sure. Well, I really appreciate you kind of taking a moment here and kind of going over more the lender side of real estate. And yeah, if you guys have any questions, feel free to get a hold of me or Berks here at Finance America.